have kind of a second part to the question. When you do start to engage with like angels or VCs, like what's generally the turnaround time once you sort of submit your plan to them to actually get the cash in a bank account?
That really depends.
Or does it just vary too much?
That's going to vary wildly based on the economic climate, your network and your track record, and the idea itself. To give you some perspective, when I did the angel investment for Weblogs Inc., I emailed someone like Mark Cuban, hey, we're raising a small round of a couple $100,000. He emailed me back in 5 minutes and with 2 words, I'm in. That's Mark Cuban. He's a certain type of angel investor. He bases things, I think, largely on, and if,
he knew you.
He knew me, the loyalty for the person, and an affinity for the space, blogging, which he was into. So I think angel investors, a lot of times, they will give you an offer on the spot while you're having coffee with them. Very common in San Francisco for you to be on the spot, showing them something, and them saying, I'll put $50,000 in at this valuation, or giving you a term sheet within a couple weeks in a hyper-competitive market. Now it's a little slower. I think it might take 3 or 4 meetings for you to get there, would be my estimate. I don't know. What do you think, Lauren?
Yeah, I think it varies tremendously. When we first went out, it took us about 6 months to get to the point where we thought we had an offer for sure, and we were told through an insider that the offer was coming, and then the last second it just dissolved. So we were fortunate to be in a position where we had cash flow, and we were actually cash flow positive. So we just said, you know what, I'm going to put my head down, I'm going to bootstrap this company, I'm not even going to raise money. The next quarter we killed it, and we beat the projections that we showed them before. They heard about it, came back, and then the deal closed very quickly. Yeah. So, I think it varies tremendously. I've heard of people getting funding from VCs, 1 pitch in 2 months. I think normally a good word to live by or a phrase to live by is it's going to take longer than you think. And I think in this economy, double that. So be prepared to bootstrap a little longer than you think you need to, and be prepared to keep proving your model and keep proving the numbers without any money, so that you don't really need the money, and then it's probably more likely to come.
Yeah, if they have the feeling that you're going to be doing this no matter what, and that you're going to just keep fighting and you're going to really kill it, then there's some sort of inevitability that this will be successful. They'll be drawn to it.
Yeah.
I'm guessing 3 or 4 months. We had Brian Alvey on the first episode, and Brian was my partner on Weblogs Inc. He didn't really know anybody in the VC community. I hooked him up with a lot of people, did personal introductions for him, which I don't really do for a lot of people, but I did it for him because he was my partner and had a really good idea. He met with at least 25 people to get his 2 investors. That's, like basically 1 out of 12. And I think that's somebody who has got a good track record. Don't be surprised if it takes 20 meetings to get 5 people interested to close 1 or 2 people. I think that's pretty much the math, which means if you only meet with 5 or 10 people, your chances of getting it done are 1 in 5. It really is a numbers game, just like any other sales type thing. You're going to need to meet with a lot of people and be very persistent. And the people that get the investment are the most persistent and the most resilient. It is a very hard thing to do to raise capital at this environment, but not impossible. And you have to be persistent. And showing demonstrable growth during the investment process is critical. So if they see, when we met with them, with Gabrielle 3 months ago, she was had 10% of the project done. Now she's got 25% done. Wow, she's moving so quickly, and she's already got a CTO, and she found a great salesperson. They start to get warmed up to it. So, definitely be having that demonstrable growth through the phases of fundraising, and always be raising capital. Even for Mahalo, I meet, I would say, every month with 5, on average. Tyler, we meet with 5 investor strategic partners per month on average. 5, 50 meetings a year, would you say?
Pretty
conservative.
Consistently. Conservative.
Tyler and I have been working together for over 2 years. Tyler does a strategy here and corporate development. Anytime we go to a city, Sydney, London, Japan, Korea, wherever we go, we meet all the strategic investors, we meet all the VCs, and we just say, hey, here's what we're doing, what's up with your world, and we're always be closing, ABC, always be closing.
Yeah, another advantage of that is when you get to the point where you actually do have a term sheet or you have serious interest, if you have 2 or 3 people interested, it goes much quicker and you get better terms. So
create a marketplace.
Yeah, you want to make it look like this train's moving, they can get on or they can miss it completely.
Yeah. And in the early stages, angel investors in the first round, VCs call it, one VC called it, and I've heard others, is they want the juicy white meat. They want to be the first person to the turkey. They want to be the first person to the chicken. They want the low valuation. They want to get a nice 20, 30, 40% slice of that pie so that when you raise subsequent rounds, they've already got 30% of the company for $1 million or $3 million or 500,000, whatever they got, so that the next guy who comes along and wants to get 5% has to pay $5 million or $2 million or $1 million to get a smaller piece of the pie. So you have so many companies, whether it's First Round Capital, Sequoia even, Y Combinator, Mark Andreessen and his new fund. So many people want to get that first slice of the pie. Ron Conway. That's why there's so many angel investing groups. That's why VCs are doing so many $250,000, $500,000 rounds. They want the juicy white meat, and you got to work that a little bit into your plans. That you're going to get on your first deal, it's going to feel like maybe you got screwed a little bit. On the second deal, you get something more reasonable, and on the third deal for your company, maybe you are the one getting the advantage over the investor.
Great.
Awesome. Well, it's great to hear from you, and do let me know if I can help in any way.
Thank
how to get in touch with me. This is great hearing from you.
You've been watching This Week in Startups. To watch the full episode, click here. To check out some other shows from This Week In, click here.